Okay, derecognition of investment property. So what does it mean to derecognize? That just means to remove the carrying amount of an asset from the records. In this instance, we are talking about investment properties. So in the previous standard, we were dealing with derecognition of PPE. That was to remove the carrying amount of PPE from the records. So when we're talking about the derecognition of property of investment property, we're also speaking about just removing the carrying amount of investment property from the accounting records. And when do we do a derecognition? A derecognition is done when that investment property is disposed of, so you sell it, or when the property is permanently withdrawn from use and no future economic benefits are expected from its disposal. All right, so when the property is permanently withdrawn from use and no future economic benefits are expected from its disposal. You can also think of it in this way when there's a change of use as well. All right, when there's a change of use, so investment property changes, then becomes inventories, or it becomes property, plant, and equipment. Then we have to remove it or declassify it from investment property and classify it either as inventories or as property, plant, and equipment. Now, when we are dealing with the derecognition of investment property, there's no profit or loss on disposal of the investment property, as we must first remeasure the property, investment property, on the date of sale before derecognition occurs. So as a result of the remeasurement, then you will not have a gain or loss on disposal. So what happens when you dispose of investment property? Disposing just means you sell it. Okay, so what are you going to do? Debit your bank, credit your investment property. All right, this one is straightforward because you're receiving cash, let's say on the sale of the investment property, and then you have to credit the investment property. Okay. Now, how do we present investment property? Investment property is presented in the statement of financial position, and it is classified as a non-current asset. So it's classified as a non-current asset. So under non-current asset, you will have a line item that shows the value of your property, of your investment property. Sorry. So obviously we have 2 years here, so these are comparative figures. One thing that is important to note, you're also only going to show one line item, just like PPE, you show one line item. And you have your other non-current assets. You might have items such as intangible assets, investment in subsidiaries, and financial investments. All right. So that is how investment property is presented in the statement of financial position. In the statement of profit or loss, what are we going to show? There are two items that, let's say 3 items that we're going to look for that relate to investment properties. If the investment property is generating rental income, we will have to show the amount of rental income that it is that it earned, and that rental income will be shown in the line item other income. And this is particularly where the investment property is not the main form of business. All right, so the rental income will be shown there as part of other income. And as part of other income, you will also include profits on fair value adjustments. Profits on fair value adjustments. All right. Someone's mic is on. I just need to delete to mute you. If you're not talking, please mute your mic. All right. So I was talking about profits on fair value adjustments, which are also included in other income. In other expenses, we will have under administrative expense, we'll just combine all the expenses together. So other expenses, distribution and administrative expenses, those ones will be shown together as one line item, and we will show any losses on fair value adjustments. We'll show any losses on fair value adjustments. One thing that you also need to note is that if the investment property is held under the cost model, you would also show your depreciation. You would show your depreciation included as part of your other expenses. As part of your distribution, administrative, and other expenses, you would show your depreciation if investment property is shown under the cost model. So what about disclosure? There are a few disclosure things that we will have to disclose. So the first one is an accounting policy note. At your level, you might not really need to show the accounting policy note, but your accounting policy note basically describes the treatment of investment property. So this is an example of an accounting policy note here. So we have accounting policies, and you will have accounting policies for each of your major line items. So you'll have an accounting policy for PPE, accounting policy for investment property, etc. So let us just read through this accounting policy note. Investment property is property held to earn rentals and or for capital appreciation, including property under construction for such purposes. You may also mention where the investment property is held, like the address. Investment property is initially measured at its cost, including transaction costs. Subsequent to initial recognition, investment property is measured at fair value. So in this example, this company chooses to measure its investment property at fair value after initial recognition. Profit, all right, so here it should be profit or losses, all right. Profit or losses arising from the changes in fair value of investment property are included in profit or loss in the period in which they arise. So in general, you're just explaining how you treat your investment property. That is the accounting policy note. All right. When it comes to if you have depreciation, then you'll have to mention also if that investment property is measured under the cost model, you will have to mention that it's depreciated, let's say, over its useful life. All right. And then the last important note that we have is the investment property note. The investment property note looks like the property, plant, and equipment reconciliation note. All right. So when we talk about the investment property reconciliation note, this note looks exactly like the property, plant, and equipment reconciliation note. Now, what you have to note is that you will show separately your investment property that is measured at fair value. So this investment property is shown at fair value. Then you would have another column for your investment property that is shown at using the cost model. All right. So you'd have two columns, one where you'll show your investment property using the cost model, and another where you'll show your investment property using the fair value model. And all you want to do with the investment property reconciliation note is to reconcile your balance at your beginning of the year to your balance at the end of the year. And obviously during the year, you would have investment property that you might have acquired or that you might have actually adjusted the fair value in. So those would be part of your movements. So for PPE, we had movements such as additions where we bought more PPE. We had depreciation, all right, for the year. We had any disposals of PPE. These are the same things that will show in the investment property reconciliation note. Any additions to the investment property, any disposals to the investment property. If you're using the cost model, obviously you'll have to show your um, depreciation. All right. So now this investment property note, we describe after the reconciliation note, we just describe where the investment property is located and how fair value is actually determined. So we can just read that. This last part, usually many times it is not tested, but it may be tested. All right. But usually what is asked most of the time is just to prepare your investment property reconciliation note. So investment property with office buildings on it is situated on Earth 1 1911 Auckland Park, were acquired on 2 January 20.7 for whatever amount it was. The property is rented out in accordance with an operating lease agreement. A bond is registered over the property with the carrying amount as the carrying amount of the bond, which serves as security over for the mortgage bond. The fair value of the investment property is determined by an independent expert who possesses the appropriate qualification and experience. The fair value reflects actual market conditions and circumstances at the reporting date. So what I just want to point out is the usual reason that this is not tested is just because this would have to be given to you, and all you have to do is you're just regurgitating what is given to you in the scenario. All right. Do you have any questions? Do you have any questions? It seems that there are no questions.